Duties of accountable institutions. The main duties imposed on accountable institutions by FICA to combat money laundering are identifying and verifying clients, reporting suspicious transactions, keeping records, training of staff, reporting cash transactions, formulating and implementing internal rules, identifying and verification of clients. The documents required for identification and verification of a natural person, South African citizen, are the South African ID book, the proof of residence, that this can come in form of utility bills, bank statements reflecting the name and address, municipal rates and taxes, tax invoice, telephone or cell phone account reflecting the name and address. The documents required for identification and verification of natural person, a foreign national, ID book or passport, a letter of confirmation from a person in authority or from the embassy. Documents required in identification and verification of clients' private company, registered name and registration number, the address, registered trade name and address, any such documents to verify tax and VAT numbers, personal details of managers or CEOs or both, details of shareholders holding 25% or more voting rights, mandate authorizing person acting on behalf of the company in entering into business relationships. Reporting cash transactions. Maximum cash to be deposited in cash is 24,999.99 cents. Any cash deposit above 25,000 must be reported to FICA within 2 days. Suspicious and unusual transactions must be reported within 5 days. Series of cash transactions must be reported within 24 hours. More than one accountable institution may be obliged to file a report on aggregated funds. Reporting suspicious transactions. Any suspicion of receiving proceeds of unlawful activities from a client must be reported. The procedure of making the report must be laid down in the internal rules. On reporting suspicious transactions, clients must not be informed or tipped off. Any suspicious transactions must be reported to the Financial Intelligence Center within 15 working days from suspension. Possible suspicious transactions are constant movement of money among different business entities, transactions that have no apparent business purpose, transactions involving large cash amounts, surrendering of policies and second-hand policies shortly after they have been purchased, loans against new generational products. These loans can be repaid with dirty money in order to clean the money. Keeping records. FICA also requires accountable institutions to keep a record of every transaction. These records must reflect, number one, the amount involved and the currency in which it was denominated, for example, rand, US dollar, pula, or cryptocurrency, the date on which the transaction was concluded, the parties to the transaction, for example, who is the sender, who is the receiver, the nature of the transaction, the business correspondence that we can stock of, the references to the transactions. Then the last duty imposed on the accountable institutions by FICA is the training of staff. Accountable institutions are to ensure that staff members receive suitable training to enable them to comply with FICA and internal rules. The penalties for either individuals or organizations that do not comply with the training requirements are 5 years imprisonment or 10 million rands. Thank you.